Hi, everyone, and welcome to another episode of Affiliate ABCs. I'm one of your hosts, Deborah Carney.
And I'm your other host, Vinny O'Hare.
And today we have a special guest, Karen Garcia from GTO Management. Hi, Karen.
Hello.
Hello.
Today we have a kind of a serious topic that has been going, it's been growing at snowball speed that we hoped would have stopped by now. We're going to talk a little bit about the Nexus tax situations and explain a little bit about what that means. We aren't going to go into too much depth because there's a lot online to read about it. But what affiliates basically need to know is whether some of their affiliate relationships are going to be ended, how to replace them, and what verticals are kind of safe to work with. So, Karen, do you want to address what the law is to begin with?
Well, it kind of depends on which state you're in. There's many states that have passed this law, unfortunately. So, just a couple of them. Of course, we've got Rhode Island, we've got North Carolina, New York,
Connecticut,
thank you, Illinois, I believe it's Arkansas.
Yes, Arkansas.
It's Arkansas, yeah. And then California just passed it yesterday, actually. So those are the states that we're looking at. It's frustrating because not all the laws are the same, so it's a patchwork. So You kind of have to go to your own legislative website. You can usually look up a bill number. There is information on various websites, various forums, including like the Performance Marketing Association site. They do have the states listed, so you can look up the bill numbers and you can read the text yourself. You can take it to your tax professional because they're really the only ones that are qualified to give you a sort of tax, what tax information yourself. So if you need information, they're the ones to go to have it explained. However, a lot of them, from the merchant standpoint, the threshold for a lot of these laws is $10,000 through your affiliate program in aggregate in a particular state. Here in California, we also have a little bit of a change to that. They try to make it not so focused on small merchants. So they did add a $500,000 kind of a rider to that. So you also have to have sold $500,000 in product to California residents in addition or together with the $10,000 generated through your affiliate program through affiliates that live in California. So it's really messy.
It's
incredible.
Kind of good, messy. But it was kind of confusing.
Right. So and of course it's all written in legalese, which I swear is like another language other than English. It's very complex, and there's a lot of other little odds and ends that go along with it. That's why I said, take it to a tax professional and have them explain it, because it will affect you differently depending on what state that you happen to be living in. So that's kind of it in a nutshell.
Right. And one misconception that affiliates are getting is that they think that they have to collect sales tax.
No, you are not responsible for collecting the sales tax, nor are you as an affiliate responsible for paying somebody else's sales tax. The sales tax is always and always has been the on the head of the consumer making the purchase. Right. So basically what this is it's a collection tax. The taxes have been on the books for a very long time. Here in California, use tax has actually been a law since 1932. So it's not a new law, which is one of the reasons that they were able to get it through with a simple majority vote instead of a 2/3 majority vote, because it's not a new tax. But that's details. Essentially, when a consumer buys anything, regardless of where they bought it from, if they are California state residents, they are required to pay sales tax on that item. Now, online purchases or purchases from out-of-state merchants, whether it's through catalog, through online, any other way you purchase from out of state, even if you've gone over state lines and bought a car or a television or something like that, when you come back into the state, you are supposed to, keep track of how much you should have paid in sales tax, and then you're supposed to remit that with your income tax in April, at the end of the year, doing your regular taxes. There's actually a line for it on your tax form. But no one's ever really done this because no one's ever really known what use tax was, and now they're really coming down hard on it. If you go and have your taxes done on like an H&R Block or some other tax preparer, there's usually like a green sign up that says, did you buy anything online? Remember your use tax. So it's the government is really, really looking at that critically, because a lot more people are buying online. Not necessarily because, they're buying something from an out-of-state merchant that they couldn't buy locally, but a lot of it is things that you can't get locally.
Right.
So they're buying other things that they want.
Right.
But you're supposed to keep track of it and pay it anyway. It's not the responsibility of the affiliate to pay that tax, nor is it the responsibility for the merchant to pay the tax. So the whole Amazon tax, it's not a tax Amazon has to pay. It's a tax Amazon collects from the consumer and then remits to the state in a one lump sum payment type of situation.
Right. And since none of these laws have been enforced, what they're trying to do is make the affiliates constitute a physical presence within other states that the company doesn't have a physical presence in. So, like, let's take, for example, Cafe Press. Their offices are in California. They have no reason to kick out California affiliates because they already collect sales tax in California.
Correct.
But the law in New York State now says that if you have, and again, each state is different, so don't take this as the be-all, end-all, but the idea is that now Cafe Press, they're saying that if you have affiliates in New York State that sell $10,000 worth of merchandise to New York State residents in 12 calendar months, then you must start collecting sales tax in New York State and remitting it. So again, part of the problem is that the government is targeting places like Amazon that don't have physical locations in most of the states, and they want Amazon to start charging sales tax in every state. And one of the things that we know, there's like 7,000 tax districts in the United States. And for any company to deal with that, small companies especially are just going to drop their affiliate programs because they aren't, if they're making whatever the threshold is, they're just going to, their tax accountant is going to say, someday you might have to collect sales tax and this is going to impact your business.
Right. Well, and a lot of smaller merchants they're not equipped technologically wise to deal with that. Their cart isn't designed to be able to keep up with a tax table of that magnitude.
Yep.
And then also to get the tax information is honestly really a mess, because depending on what state you are, and what county, there's all these different dates that they actually update. Some places update, once a quarter, some update once a month. Sometimes they change on, a weekly basis, it seems. And then they're not necessarily done by zip code either. So you can't do a zip code lookup. You actually have to, be very, very granular and look at address-based stuff, because the way that the zones are drawn up is a nightmare. It's not just, a zip code or a county. Sometimes it's parish, sometimes it's ward, sometimes it's, it's all these little teeny tiny, carving out of sections of towns, depending on what they're charging. And it's kind of nickel and dime, but you have to do it right or you could be in big trouble.
Yeah, you get charged with tax evasion. And it's the merchant that will get charged with tax evasion because they aren't they supposedly aren't collecting the tax that they may not even know that they should be collecting.
Right.
And the other part of that is, in addition to having 7,000 tax districts, different states and different counties have different rules as to what is taxable and what is not. Clothing under $50 is not.
New York, that couple weeks, right?
Right.
Clothing under $100 is
tax-free.
It's tax-free.
And in Pennsylvania, there's no tax.
Right.
In Pennsylvania, there's no tax on clothing. But in, other states, there's tax on prepared food, which, would impact like your Hickory Farms, which, all of a sudden that turns into a prepared food that in this state is taxable, in this state is not taxable. So not only do you have to have all the tax tables.
Probably not even by state by state.
No, county by county.
County by county.
County by county.
Go out to Long Island to that Boston market. We get taxed way different.
Oh, yeah. Every county has their own tax. So New York State tax is 4%. But every other county adds on 4.5%, 5% of their own. Right. Manhattan adds on 4.5%. And, upstate New York, Monroe County, where I came from, 4.5.
Long Island's a lot higher.
Long Island, whatever. I heard someplace was 9%. So, but the point of it being is that it's a very convoluted, very confusing tax. And the bottom line is that a lot of merchants, rather than try and keep their affiliates, if it means they're going to have to start charging sales tax in a particular state, they are going to drop the affiliates from that state. So what we want to talk about now is a couple things. One being, try to educate your merchant by, like you said, Karen, send the merchant and tell them, talk to a tax accountant because they may not be liable for sales tax at all. And the other thing is to look for merchants that are already in your state. So in California, like we said, places like Cafe Press or, and where's Amazon? Amazon is in Washington?
Washington. Mm-hmm.
So, they're in Washington and if you're a Washington affiliate, you're safe.
You're the only ones.
Washington passes a crazy law too. You don't
right. Well, no, because Amazon's already collecting sales tax.
Yeah, they're collecting sales tax in Washington.
Right. So a couple things that affiliates need to look for when their state gets hit with one of these laws is, number one, are you in a position to move? And if you're going to move, you got to move to a state that doesn't collect sales tax at all. And they're not all located in very friendly places like New Hampshire and
those rules can change too.
And
so
Delaware,
that's not really a long-term solution.
There's a few states that have no sales tax, but there have been people that move. Bat Wallet, big example. They moved their company 10 miles from the state of Illinois to the state of Wisconsin. And the employees actually moved as well. The owner of the company moved to Wisconsin to make sure there's no Nexus in Illinois at all. Mm-hmm. And then the other thing to look at, in addition to location, ask your merchants, where do you collect sales tax now? So does that make me safe?
And when you send an email to your merchant, put some links in there to send them to the right place too.
Right, send them to the PMA. Does PMA.com redirect, or do they have to type in?
No, it's performancemarketingassociation.com.
Okay, so include a link to the performancemarketingassociation.com. Include some of the links that are on that website directly to your state legislators, the information just about your state. And, let them know that this is unfair and it's putting you out of business because now people are ending their contracts with you. The way you have to put it so that politicians understand, they don't understand that I make a commission when I sell something. They understand that I have a contract, which you really do with your, when you join a network, you actually accept the terms of service. So it's a contract. You can say, merchants are ending their contracts with us because of this. So contact your merchants, find out where they charge sales tax already. Ask them if they are going to drop affiliates if the Nexus, hits them. So like if you drop Amazon and you go and add, I'm just going to say, just another company that's in a different state, and then that state passes a law and they end up kicking you out, or they find out that they have more Nexus than they realized or more tax liability. And then the other thing is that there are certain verticals that are pretty safe. And Karen, you run a program that's pretty safe.
Yeah, the
blog world.
Sorry, my brain just totally froze there. Wow. I was looking at this map and went,
tired of listening to me
I'm turning off. I don't know. So yeah, so any sort of program where you're selling, where it's a lead program or a service program, blog world. So it's a ticket. It's a service, not a product. Things like that. Those are things that are usually exempt from taxation, or it's not something that has even a monetary transaction necessarily like a lead on the consumer end. So there's no tax collected at all. Programs that are out of the country, Those are also safe as well, because they are exempt from collecting tax from consumers. So that's another place to look as well. So those might be options for you. In terms of finding out whether the programs you're in have Nexus within your state, it's really important, even if it's the law hasn't passed in your state yet, to take a look at who you are partnered with. If you've put all your eggs in one basket, it's probably not the best idea.
Yeah, it's time to start diversifying.
Diversify, the best source of information is going to be your affiliate manager. Contact your affiliate manager, ask them, hey, where do you have Nexus? If they respond to you and say, what are you talking about? Then educate them, and explain to them, look, this is a big deal. And it could be that they don't know. I had phone calls this morning from merchants who aren't my clients that found my number somewhere and they were really freaked out. Merchants need to know ahead of time. You need to take the time to prepare ahead of time. Just it's a good business practice to be prepared in case something does happen. Heaven forbid a merchant drops you tomorrow regardless of this Nexus tax. If they change their minds and they close their program, what do you do?
Yeah.
Do you have a contingency plan? So taking a little bit of time ahead of time and talking to your affiliate manager, making sure that they know what the issue is, and then if they know what they would do in that situation within your state, is really important for you, because you're running a business. It's not just a blog. It's not just this thing you do on the side. It's a business, and a business should have a contingency plan in any event of catastrophic need, essentially. Which for a lot of affiliates, that's what they're doing today in California. Is that they're panicked, they don't know exactly what to do, and what you need to do is you need to take the time, find merchants that can tide you over, essentially, that have Nexus within your state, or that will not be removing you from their program, because especially with the smaller merchants, they may not have a bigger reach product wise as some of the larger guys like Amazon, but they have the products that you're looking for. So you may be partnering, rather than partnering with 5 or 10 big guys, you may be partnering with 150 small guys,
which is a good idea.
It's really a good idea, because it does diversify. If you do have a problem with a singular product, well, that's only one merchant,
right,
rather than 100 products with one merchant.
Right. Over the past few years, let's be honest, the Amazon Associate Program is one of the oldest affiliate programs out there. And if you log in, they've changed the wording to be advertising. They're calling affiliates advertisers instead of even calling them associates. Right. Which is how they started out. They never called them affiliates to begin with. Right. But their program is structured in a way that, I know personally people that have probably 20,000 Amazon links on their website. And because they go out and they recommend books to people, it's easier to sell the kitchen products through Amazon instead of going to the networks and finding all the little places to sell from. And Amazon's been around forever and it converts relatively well. And there are people who are making a lot of money with the Amazon affiliate program. And now Amazon, because they want the states to not use this as leverage, they're just turning off the affiliates. Otherwise, they owe and the really bizarre thing is that how can you tell Amazon they owe you money that they never collected?
Right. Well, and several of the states have made it retroactive. I know that Connecticut was trying to go back, I think it was 3 years, for taxes that weren't collected. And for a smaller merchant, even for a big merchant, the tax bill on that is just tremendous. Yeah. And I don't know about you, but I don't have several $1 million sitting around collecting dust. Yeah. So, and a lot of smaller merchants don't, because that's capital, and you use it to expand your business, to make sure you have product in stock, to pay people to work for you, and to have that show up as a surprise is devastating to a lot of businesses. So it's really unfortunate that some businesses, they kind of have no choice because they can't afford. Right. They can't afford it. So that's kind of the other thing, is that I have heard from a couple managers that they've been yelled at by affiliates, and sometimes it's not what they want to do. They don't want to remove you from their program. That's the last thing they want to do. it's their hand is being forced, and that's the only choice they have at this time. So be kind.
Yeah.
Nobody likes this at all, period. But no, the merchant isn't out to get you personally.
No.
And that's not what anybody's trying to do. So, just keep calm, find somebody that can, basically has the products that you need to replace links on your site. So.
Yeah. And
well, I'm just concerned about all these affiliates, like you said, and been running this program for so many years.
And they depend on their major income.
Yeah, and yeah. I know when it happened in New York, I changed out probably 10,000 links, and then I put up about 5,000 links to different stores, and was cut down like 2 days later.
Right.
I was dropped by those. So take your time and find, do your homework and find affiliate programs that
aren't going to drop you. Yep.
Yeah. Right. It's better to have essentially links that aren't making you money for 2 hours.
Yep.
That will take you to make the phone calls, to make the contact, to get confirmation, rather than spending 20 hours running around with you're like a chicken with your head cut off, putting links up that are then going to be broken. So, take a little bit of time, find out what you need to find out. Make sure that you're going to be okay with the new links, and then place, because it's going to save you time in the long run and a lot of headache.
Yeah, and if you call an affiliate manager and they say, no problem, we got it covered, we know all about it, everything's good, and he sounds too sunshiny, you're probably going to find out 2 or 3 days later that he's going to be sending you that email saying, oops, we didn't know, we got to kick you out. So if an affiliate manager tells you that they will not be removing affiliates due to the Nexus laws, ask them how they know that. Either the owner of the company has, reassured them that they will add the sales tax to their carts, or that they have non-taxable product, or that they already have a Nexus in the state. So, find out a little bit more than just a glib, oh, yeah, you're good. Make sure that you say, am I good because, and then, find out specifically why they're not, that they're not going to. And some merchants, like you said, in California, they added that extra balloon. Some merchants are never going to, the smaller merchants that you work with, they're never going to meet the thresholds unless You've got some kick-ass affiliate in California that's selling to just California people, because it does have to be just that state affiliates selling to just that state's residents, which is another accounting headache. But, a lot of the smaller merchants, like you said, if you're working with 150 smaller merchants, it's more diversified. You're going to have more of a chance of not being kicked out of programs, because they're going to be grateful for getting the sales that they were losing to the companies that kicked you out.
Mm-hmm. Exactly.
So, all right. Well, I think we covered that pretty thoroughly. Again, Karen, you had a couple of resources, PMA and Nexus site where you could look up.
Yeah, so the Performance Marketing Association has information on all the various laws. If you want to look up the law for your particular state, or a law that is pending in states, where there's a lot of states that are trying to pass this law that haven't passed it yet, and you'd like to get involved, go there, check out the information, send it to your affiliate managers, because if they don't know, they are unprepared. And then the gut check is to usually kick first and ask questions later, which is not what you want. So be sure to spread the information around, tell other affiliates, tell your managers. And then the other site is actually a site that we here at GTO made. It's called nexusaware.com, and it's difficult to keep everything necessarily 100% up to date. So I can't say it's the completely verified resource for everything, though I'd really love to. So many merchants are changing things on an hourly basis right now. But you can go there and you can do a search either by state or by a specific vertical. If you're looking for a new book merchant because Amazon's removed you and you need a specific book, it'll give you a list of merchants as well as the network they're in and the state that they've declared as that they have Nexus in. They may have Nexus in more states that they haven't told us about yet. but we do try to keep that updated as much as possible. And if there's a merchant that you see that we're missing, let me know, and we'll try to get them added. But it's just kind of a stepping stone to make it simpler for affiliates to find merchants when they are in that crisis situation, without having to run hither and yon looking in 8 different networks for a emergency stopgap.
Okay. And so it's Performance Marketing Association.
Correct.
.com. Okay. I know there was a different name for a little while, so I just want to make sure everybody heard that. And it's Nexus, Nexus.
Nexus Aware.
Aware. Okay.
Right. You need to be aware of where you have Nexus.
Exactly. Nexus Aware. And Nexus is Nexus and then just AWARE. So, okay. Karen, where can people find you on the internet?
You can find me at gtomanagement.com is our website. You can find me on Twitter at twitter.com/Karen Garcia, or our company is GTOman on Twitter. You can also send me an email at karen@gtomanagement.com.
Vinny?
You can find me at viniohair.com or Twitter/viniohair. And
as always, we would love to, all of you that found us on iTunes, we would love for you to come and visit us at affiliate ABCs Plus. No.
AffiliateABCs.com. I've been waiting weeks for you to mess that up.
I have 2 separate sites. I have Affiliate ABCs and then I have ABCs Plus. So I just mashed them both together at the same time. That was pretty funny. AffiliateABCs.com, and you will find this podcast and, leave us comments, leave us questions. We can point you at resources. Maybe we can help you find new programs to replace the ones that you are trying to replace. And, we'll make sure that you can get to the information you need to get to, and you can talk to the people that you need to talk to. You can find me at twitter.com/Loxley, LOXLY, and you can find ABCs Plus. I did it again. Twitter.com/affiliate ABCs. And as always, we like to thank Geekcast.fm for hosting all of our podcasts and all the other podcasts they have that are really good, that address affiliate marketing, internet marketing, and blogging, and all kinds of really cool stuff. So I hope you not actually enjoyed this one, but that you learned some information from this one. And thanks for listening.